Hi, I'm here today to demonstrate just how easy and powerful the Easy Business Case Financial Calculator is for providing you with the financials that you'll want to include in your business case. Now, for those of you that found the video other than through the app, this is an app that was created for the iPhone, iPad, and is available for download at the App Store. Now, whether you're just starting out your business or whether you have an existing business and are looking to expand, maybe add a new product line, or maybe you're just looking to run a sales promotion or a discount on an existing product line, this app's going to help you calculate the metrics you need to make a decision. So you'll get metrics such as internal rate of return, net present value, payback period, required initial investment. It'll also provide a 5-year plan. So all this is going to be very useful to include in a business case if you're applying for a loan, you're trying to woo investors, or even if you're internal in a larger company and you're trying to convince management to move forward with your project. Now, before we get started, a housekeeping item. This is a cash accounting basis model. And so if you have significant time periods between recognition of revenue and expense and collection or payment of those items, then this model is not going to work. But for the majority of companies out there, that's not the case. There's very short time periods, a month or so in between collection and payment and such. So this model works great. Now, starting today, I'm going to demonstrate how to do a model for a startup company, and I'm going to choose what I know, which is an app development company. So, in starting to use the app's not going to know about your business. You're going to have to tell the app about your business, which means you're going to have to do a little bit of homework before we get started. And that will happen as you fill out the other sections of your business case. I've done my homework. I've just kind of done it on a scratch sheet of paper. So I'm going to slide that piece of paper in here. And you'll see I kind of divided it up into 3 sections, which are handy when inputting into the app. I have revenue. So I'm expecting by year 3 to have 5 apps developed, and I'm targeting 1 million users. Now, I don't expect to get those 1 million users on day 1. So I'm going to want to phase it in, maybe 250,000 users first year, 700,000 second, and ending up with 1 million users in the 3rd year. After that, I'm putting in a growth factor of 10%. I'm going to target a $3 per app in revenue. Now, I've done some market studies. I think I can, between in-app purchases and the advertisements in my apps, that I will be able to get about $3 per app in revenue. Now, I can also use the business case calculator to back solve what I would need to get the desired return. Now, for startup expenses, I have no office or build out because we're planning on working from home. There's only 3 of us. We're going to set up the company. We're doing most of it ourselves, so we expect some $500 and some filing fees and some other items. The website and domain setup, we're also doing the website design ourselves, so we're only expecting to spend $1,000. Computer equipment is probably where we're spending the most money at $20,000, for some laptops and servers. Legal fees at $5,000. This is for some privacy documentation that we're going to need and some other items. So not that much in startup expenses at $26,500. Now, ongoing expenses are a little bit more substantial. We're going to have 3 employees, as I mentioned before. This is going to be at $500,000, all loaded in, salary, benefits, etc. Some minimal legal expenses on equipment, licenses, supplies. Again, so we have some insurance, and we're outsourcing our HR admin. Marketing is where we're going to spend a lot of our money. We have a $20,000 a year flat budget and $2 per app. Now, if I and then the other one is app stores. App stores are going to take 30% of my revenue. Now, only 50% of my revenue is going to come from in-app purchases. the rest is going to come from advertising, as I mentioned before. So if I take that into account, the 30% times 50% gives me 15% that I expect of my revenue to go to the app stores. Now I can kind of divide that into three sections. I have $528,600 of flat expenses each year. I have $2 per app, and app stores taking 15% of revenue. Okay, so now that's my homework. That's where I'm gonna tell the app about my company. So let me slide the iPad back over here, and I am going to boot up the app. And here it is loading. And when it loads up, you'll see a screen where right now it only has in the list a sample business case. And that sample business case is going to let you walk through the app, understand how the app works, show you sample reports with real assumptions in there for a business case. It's going to even let you adjust assumptions, see how it changes. You can even type in your own business case and produce the reports for free. Now, if you want to be able to save business case, create your own business cases that you can save and save different versions, there's a small charge for upgrade. So I've already upgraded. I'm gonna create my own business case. I am gonna call it App Company because I'm really original. And it's going to take me to the menu screen. So here you're going to see that we have buttons for reports and to save, but we haven't done anything yet, so there's no reports to see and there's nothing to save. Now there's some templates here for entering in assumptions. They're pretty easy to use, but one of the things that makes the app even easier is that we have a walk me through it for the first time. So generally when I'm starting a new business case, I'm gonna ask to walk me through it. Now, what walk me through is going to do is it's going to give a series of questions, and then it's going to populate all those assumption templates based on your answers to those questions. So the first one is, how many years in the business case? Well, this is an app development company. I expect for it to be indefinite. Now, the app will let you enter up to 99 years. After 100 years, that is going to be inconsequential. Any type of discount or IRR is going to be basically zero after 100 years. Now, that's also true after probably about 20 years, and 20 years runs a lot faster than 100 years. So I'm going to use 20 years for my company, and I'm going to hit next. Now you have two choices here in how to enter your revenue assumptions. Do you want to enter units and price per unit, or do you want to enter revenue? Now, I have some expenses that are based on units, so it's very important for me to get my units in there. If you didn't have that, you could just say, I'm going to make $1 million of revenue in year one, 2 million in year two, and such. Now, units and price per units can really be anything. It's agnostic. You can be, in my case, number of apps and price per app. If you're selling something like widgets, you can have your number of widgets sold and your price per widget. Let's say you're a consultant and you want to put billable hours and your rate per billable hour. So I'm just going to hit next. Now it's going to ask me how many years I want to enter in manually. And what this does is it allows you to get more granularity, or kind of a more specific for the 5-year business plan. After what I said in my assumptions was I'm expecting to grade up to year 3 at 1 million users, and then after that I just have a growth factor. So I'm just going to put 3 years here. And then it's going to ask me to enter my units and my price per unit here for the 3 years. Now, I said that I was going to have 250,000 in the first year for my units, 750,000. Sorry, it was 700,000. Second year, and 1 million. Third year, And then my price per unit was $3 starting. Now I'm going to expect some inflation. I'm going to say 3%. So I'm just going to enter 3.09 for my second year and 3.18 for my third year. And then I'm going to hit next. Now it's going to ask you for expected growth rate of your units once you get past the 3 years I entered. So I said I'm expecting a 10% growth rate. Now you do need to enter this as decimals, so 10% is 0.1. I'm going to hit next. Now it's going to ask what is my expected inflation rate for my price per unit. So how much is that going to, my prices are going to increase every year. I said 3% or 0.03. Now it's going to ask me any setup costs. Now we're past the revenue section and we're into expense already. So any initial setup costs to be paid at time 0. I went through and I said 26,500. I'm going to hit next. Now the same thing, I told you I had 3 types of expense. I had fixed expense every year. I had per app expense, and I had percent of revenue expense. So I said I was going to have 528,600 of fixed expense each year, and it asked me again, how many years do I want to enter fixed expense? I can put 0 if I have no fixed expense. I can do up to 5 if I want to get more granular, the same way I did with revenue. Here what I'm going to do is I'm going to put 1 year. Here I'm going to type in that fixed expense at 528,600. Then I'm going to hit next. Now it's going to ask me, is that fixed expense going to grow every year? And yeah, it's going to grow with inflation. So I'm going to say 3%, the same that I use for my price. And I'm going to hit next. Now it's going to ask me, enter the amount of expense related to the number of units sold. So this was my $2 per app of expense that I talked about as marketing expense. And then it's going to ask me what is the inflation on that. And again, I'm just going to say that's going to go up by 3% each year. Now it's going to ask me for the expense per amount of revenue, and we talked about that the app stores were going to take 30% and they're only 50% of my revenue, so that's going to be a net expense of 15% of revenue. Now this one is just asking in case you have a tax authority that does not allow you to deduct all of your expenses. And in the US, you have some marketing expenses, maybe taking clients out to meals that might be limited for deduction. So you could put in 95% of my expenses are going to be tax deductible, or 80%. I'm just going to leave it at 100%. Will there be a loan to help fund the business case? So for right now, I'm going to say no, and I'm going to hit next. Now enter the amount of your income tax. So this is basically the effective amount that you're going to pay in income taxes to whatever taxing authority. And I'm just actually going to leave it at 25%. That's what's preloaded. Now, will losses be carried forward? Now, this is if you have no other source of income and it's just this company, most tax authorities are not going to they're not going to pay you if you have a loss, 25% of your loss. They're going to say, we're going to let you have a credit against future taxes. But if you do have other income, I have a spouse that works, so I have other income coming in, and I'm going to be able to offset some of this. So I'm just going to say no, and I'm going to assume that any loss that I might generate will go against her income, and I'll get that money back. Okay, the model assumes that any cash generated is basically dividended immediately, that you're just not going to let cash sit there doing nothing. But you might want to have a certain cash reserve on hand. Maybe you're taking out a loan and there's a minimum amount that you need to have on hand for a covenant with whoever's giving you your loan. For whatever reason, this is the cash that you're going to not dividend out. And I'm going to say for this case, $40,000 is my minimum cash I want on hand. Now, investment income. What's your investment income rate on the cash that you do have there? And, an app company, I'm not really looking to invest. My revenue is my main source of income. So I'm going to say I'm going to earn 1/4 point. So entering that as a decimal, I'm looking at 0.0025. Now, hurdle rate. Hurdle rate is basically the decision point, the go, no go. So if I have let's say a 10% hurdle rate, and I'm just going to type that in, 10%. Here, basically what I'm saying is, if my rate of return is less than 10%, then I'm not going to do this. If it's greater than 10%, I'm going to do this. This is going to be used in calculating your net present value. And that's it. Now I can hit reports. It's going to calculate. Now this is going to take maybe a minute. And then it's going to generate reports. And you'll see that there's basically going to be 3 types of reports, and I'll walk you through each one of those. Okay, there we go. So the first page, there's 4 pages, and the first is your stats, and the first line is your required initial investment. In this case, it's saying that I'm going to need $463,000 to get this thing up and running. That's basically the amount of any losses I might incur in the first year from startup expenses and setup costs and such that my revenue is just not going to cover. Initial loan balance is 0. I have my IRR at almost 33%, which is great. I have a net present value of 3.9 million, which is because my IRR is a lot greater than my hurdle rate. And then I have my payback period of 6.4. I also have growth metrics down here, both for units and revenue. You can see I ramped up very fast, and then I got down to my 10% plus my 3% inflation on my per unit cost. Now I can go to my 5-year plan. And you see this has sales, revenue, expenses, loan interest, everything broken out for you. You can actually hit what is cash available. You can hit the little question mark, and it goes to help screen that says cash available and explains what it is. Hit OK to go back. It gives a nice chart for your business case. So you have your number of units in blue, and then you have your revenue in black, my expense in red, and my income in green. Then I have my expense detail on the 5-year plan. The expenses is just one line. So this kind of gives you a chart to break out what your one-time, your fixed expense, your per unit, and your percent of revenue expenses are. Now I can come back here and I want to save my app. Now it's already populated with the name, so I'm just going to hit save. It says this business case has been saved. And now I'm going to go back, and there it is, AppCo. Now, one of the powerful things about this app is I can now start with AppCo. I can load the business case, and this time I want to do another version. I want to add a loan, because if you remember right, I needed an investment of $463,000. I don't have $463,000. I can come up with maybe $250,000. So I'm going to go in here. Now I'm not going to go through the whole walkthrough again because everything's set up for me. So I can come in here in revenue. Here's all my revenue assumptions. And so that's all been populated when I walked me through it. So I'm just going to come here in the loan. And I'm going to say, now I need about $500,000 of 463, but I only have 250. But if I ask for another 250, I have to pay back those loans and payments, and I don't have that money. So I'm going to need to take out a little bit more. I'm going to say $350,000. Now, you might not be able to do that in your head, so maybe there's a little back and forth of you typing in 250, going and looking at the report and say, oh, I need more, and coming back. But it's rather easy. So I'm going to take a 10-year loan. Now I can do, maybe I don't make payments every year, maybe it's a balloon, there's different types. So I'm just gonna do the same number of payments that I have in my loan term. I'm just gonna make monthly payments. Now when I click off of that, it's gonna calculate my loan payment for me. You might not be able to see that because it's kind of got a shade on it, but it's $4,600. Nice, you can use this even without a business case. You can use this as a loan calculator. Now I'm going to go back and I'm going to run my reports. Again, it'll take about the same amount of time because I'm still running it for 20 years. Okay, here we go. Now, you'll see my required initial investment has now dropped to $240,000 because I have a $350,000 loan, and I told you I have that money, and I have the internal rate of return. It actually went up. This is the leveraging effect due to the debt. Now my net present value, it went down a little bit. This is because now I have to make payments on my loan, and I get a payback period of 6.2 years, and all the growth rate is the same. So now I've done that version, and now what I'm going to do is I'm going to hit save, but I don't want to save it as APCO because I already have APCO as my original scenario. What I'm going to do is I'm going to come in here and I'm going to type APCO with loan. And I'm going to hit save. Now it's going to save. Now I'm going to go back. And now you can see I have APCO and I have APCO with loan. Now I can create as many scenarios as I want. I can load up APCO with loan again, or maybe I just load up APCO and I can test, well, what if instead of $3, I make $4? What if my cost per app instead of $2 is $2.50? What if my inflation rate is 5%? I can run an unlimited number of scenarios. And that's what makes this so powerful is, it takes a little bit of setup there, your first business case, but once you want to run any scenarios, it's super powerful. And when you're creating this, you can easily, I got to run it again, but you can take these reports, you can screen print and then email them to yourself and just paste them in your Word document or whatever tool you're using to do your business case. So I hope this has been very helpful for you, and I hope you enjoy the app. Thank you.